Good evening, everyone. Welcome to the official YouTube channel of Officers at 24/7. So, first of all, let me know how are you all, and also let me know is audio and video both are okay. Are we good to go? So, as you know, we have started this Achiever series in which every day we are discussing particular unit of your all modules. So, if I talk about module A, B, and C. These three modules we have completed on YouTube in form of most important MCQ, and we have started your module D, and in module D today we are going to have our class number 3. So it means of module D we have completed 2 units, and today we are going to discuss the third unit of your module D. Okay, so let's move forward and we will be discussing the third unit of your module D. And if you talk about the unit number we are going to talk, that is unit number 31, because module D starts from 29 units and ends to the 45th unit. So we are going to start with the when you are going to study module D, you have to start with the unit number 29, and today we will be discussing unit number 31. Okay, so before moving forward, do let me know have you seen the earlier sessions or not. If you have not seen earlier sessions, then you can simply go to the office of Study 24/7, okay, and go to the playlist. In the playlist, you will find all the recorded sessions available. Okay, so you can go and simply check the recorded session and you can watch recording there. But yes, do make sure you cover each and every session because these sessions are definitely very helpful for your May 2024 paper of JIB. Okay, so do make sure you check all the sessions and the recording only on Officers at 24/7. And if you want to join regular session for IE IFS, then you have to join in the evening at 7 p.m. Okay, so let's start. So today our class number D, module D, class number 3 is there. So the class number 3 is all about capital market and stock exchange. This is class number T. 3, if you talk about the unit number overall, this is the 31st unit of module. Okay, so let's start. So before moving forward to the questions, let's first understand what this topic is, then we will move to questions. So first of all, it is talking about capital market. Capital market is regulated by SEBI, Securities and Exchange Board of India. So capital market is regulated by whom? It is regulated by SEBI, Securities and Exchange Board of India. Next, if you talk about capital market is a long-term market. Long-term market means the market for more than 1 year. The market for more than 1 year is known as your capital market. Apart from that, in this market, the selling and purchasing of securities will be done. Selling and purchasing of securities will be done in this particular market. Okay, now when it comes to the securities, what securities we are selling or purchasing here? We are selling and purchasing shares, bonds, and debentures. Okay, these are the securities we are selling purchasing. So apart from that, capital market, we can also say that the capital market includes both the markets. The first, it includes equity market, and the second, it includes your what market? It includes your uh, debt market. So equity market means simply a market where the trading of shares will be done. And debt market means simply you have to trade for the debt instrument. Debt instrument, those instruments in which you are giving money to the company in form of loan. So debt instrument includes your first bonds and debenture. Okay, these are the debt instruments in which maturity period will be prefixed, rate of interest will be prefixed, that will be provided to the. Okay. Now, next, if we talk about stock exchanges, a stock exchange means simply the place where you can sell and purchase these securities. So, the stock exchange we have to study in deal, that is Bombay Stock Exchange and National Stock Exchange. The Bombay Stock Exchange is known as the oldest and fastest stock exchange in Asia. Not in India, in Asia, the oldest and fastest stock exchange. National Securities, or I can say NSE, National Securities Exchange. Uh, NSE is actually the first stock exchange which started electronic trading. It is the first stock exchange which started automated screen based, automated screen based electronic trading system. Electronic trading system. So this is the only stock exchange that have started electronic trading system in the country. That is the first one, not only the first one to start the electronic trading system in the country. That will be in form of online, like screen based automated screen electronic trading system that was introduced by NSE. It started its operation in 1994, and then in 1995 Bombay Stock Exchange also introduced the electronic trading. So BSE was established in 1875 and National Stock Exchange was established in 1992. Okay, so these are the basic details we should know when we are going to study the capital market and stock exchanges. So these are the basic details. Now the remaining details discussing in form of MC. So let's move forward. Okay. So the first question is talking about the process by which a stock exchange transition from a mutually owned entity to a shareholders owned company is known. So we are talking about what? We are talking about the changes in the legal structure of a stock exchange. So the change of the legal structure of the stock exchange have been seen, and that what we are talking about in this question. Like when you change the legal structure of your stock exchange from private owned entity to the public owned entity, or the public owned have the shareholding of the entity, that process is known as which of the following? So this process is known as dematerialization, demutualization, demonetization, or monetization. So demonetization, we all know, it is simply to stop the legal tender of a currency. Okay, when you stop a legal tender of a currency, that is known as demonetization. Monetization means when you convert your asset into cash. Okay. Dematerialization means when you convert something into digital form, like if you convert the physical security into digital security, electronic form, that is known as dematerialization. The right answer will be sorry, when you convert from digital to, that's correct. When you convert from physical to digital, that is dematerialization. And the answer for this question will be your B, that is demutualization. When it comes to demutualization, it means what? It simply means we have changed the legal structure of the stock exchange. Okay, that is known as demutualization. So right answer would be clear. What is the minimum tenure for commercial papers? So when we talk about commercial papers, which of the following is the minimum tenure for commercial paper? So commercial paper we have discussed, it is actually issued by corporates. Okay, who issue the commercial paper? It is issued by the corporates. Okay, apart from that, the commercial paper will be issued for 5 lakh, and if you want more than that, then thereafter multiple of 5 lakh will be issued. Okay, apart from that, the commercial paper are unsecured and non-negotiable money market instrument. Okay, so why it is here? Because it is issued by the corporates. Okay, so now if we talk about the duration, the minimum duration is 7 days and the maximum is 364 days. This is the duration for which the commercial papers can be issued. So your right answer will be the option. Okay, your right answer will be what? It will be your B option. Next. In an IPO through voluntary book building, what percentage of issue is reserved for retail investors? So retail investor means individual investor. So what percentage of your voluntary book building have been fixed for the percentage that is reserved for the retail investor? reserved for the retail investors? It is 10%. Is it 10%, 25%, 35%, or 40%? Okay. The right answer here is 35%. For retail investors in voluntary book building, the percentage of IPO that have been maintained, that is 35%, C option. An IPO, you all know, initial public offering, whenever a company issues shares for the first time for the public. Okay, next question. A retail investor is one who applies for or bids for securities of or for a value not more than what amount? So if we talk about retail investor, who actually are the retail investor? So who are retail investors that have been defined on the basis of what amount they can invest or they can bid in the market for the securities. So is it 50,000? Is it 1 lakh? Is it 2 lakh? Or is it 5 lakh? Which of the following is correct? A, B, C, or D? Okay. The right answer will be your C, that is 2 lakh. Retail investors are those investors who applies or bids for the securities for a value that ex, do not be more than the 2 lakh rupees. So right answer will be C. Okay, now which of the following is a component of the secondary market? So we know in the capital market, the way of trading are two, that is primary and secondary. The primary market is also known as fresh issue market, or you can call it first issue market. Okay, and the secondary market is known as market of existing securities. Market of existing securities. That is your secondary market. Okay, so which of the following is a component of your secondary market? So when you talk about IPO, it's a part of primary. If you talk about FPO, it's a part of primary. If you talk about private placement, it's a part of your primary. If you talk about public issue, it's a part of your primary. The right answer will be security auction market. Okay, the market where securities will be auctioned, that will be known as the part of your secondary market. The right answer will be your C option. Okay, now which of the following is are correct about QIB? So first of all, uh, let me know what is the full form of QIB, and apart from that, which of the following are correct about the QIB? First of all, whenever a company want to issue share, it have three options. It can go with the public issue, it can do the private placement, okay, and the third one is qualified institutional placement. These are the three options in front of company by which company can issue shares for the public. Okay. Now, when it comes to your public issue, it means company have issued the share and anyone can purchase it. Any person who wants to purchase the share of a company can purchase the share. Now, private placement simply that the company have announced that it is going to the share, but for a group of people. The group of people will be already defined when company issue the shares. Like we are issuing share for these 10 people or 20 people or 40 people. Okay. Now, qualified institutional placement is the placement in which only qualified institutional buyers are allowed to participate or allowed to purchase or sell the securities. Okay. Now, first is saying it is an institutional investor who is perceived to possess expertise and the financial strength to evaluate and invest in the capital market. Okay. Second is saying SEBI has specified certain categories of investor which are considered as QIB. Okay. For example, mutual fund, scheduled commercial bank, primary dealers, non-banking financial companies, etc. These are the QIBs, and the right answer will be all of the above. The right answer will be what? All of the above. Clear? The right answer will be here, all of the above. That is correct about QIB. Correct. Now, what does ASBA stand for? ASBA stand for application supported by blocked amount, application supported by black account amount, or application supported by a blocked account. So you have to answer, is it blocked amount, is it black amount, is it blocked account, or is it none of the above? So which of the following is correct here? A, B, C, or D? Okay, so it is actually application supported by a blocked amount. So this is what, this is simply an application. Anna, this is simply an application that will be given by the account holder in a bank. This application will be given to the bank, which authorized, it authorized the bank to block a certain amount of money, to block a certain amount of money in your account to purchase new issue. So simply, let's say for example, a company announced that it is going to issue the shares. Okay, and what happened? I want to invest in this company's share. I want to purchase the share of this company. So what I have done, I have asked my bank to block a certain amount of bank account so that I will be able to purchase. Okay, so that I will be able to purchase the new issue. That application will be known as your ASBA. Okay, that application will be known as your ASBA. So ASBA is simply a process in which a customer or the investor will give an application which authorize the bank to block a certain amount of money in the account of a customer. The right answer is your A. Now, which one of the following is are the types of capital issues in primary market? So I have just told you. So which of the following are the types of your capital issue in primary market? IPO, SPO, public issue, private placement, right issue, or all of the above? And the answer for this question will be all of the above. In the primary market, initial public offering, follow-on public offering, public issue, private placement, and right issue. All these can be. Okay, so right answer is D. Now, next question. A bond giving the investor the option to convert the bond into equity at a fixed price. It is referred to as a dash bond. So it cannot be unconvertible bond because it is saying it allow the bond to be converted. It cannot be unconvertible. So the right answer is it's a convertible bond. So the bond which can be converted in future, Hana, in the other security, that is the equity shares, this is known as your convertible bond. The right answer will be your B. Okay, now dash is a tax being levied on all transaction done on the stock exchanges at rates prescribed by the central government from time to time. So whenever we talk about a tax that will be charged by the central government on the transaction that have been done in the stock exchange, that tax is known as what? Securities transaction tax, corporate tax, custom tax, or a long-term gain tax. So the right answer for this question will be your securities transaction tax, STT. It is the tax that will be charged on all the transactions that have been done on the stock exchange at rates prescribed by the central government. Okay, so right answer will be A. Good evening, everyone. Welcome to the official YouTube channel of Officers Adda247. So first of all, let me know how are you all. Also, let me know that as audio, video, both are okay. Are we good to go? So as you know, this is our Achiever series in which we are discussing one particular topic of your each and every module that we are covering in this particular series. So today we are going to cover module D, and we have started module D, and I keep telling you that we have already done with the module A, B and C. These three modules have been completed by us on YouTube, in which we have discussed each and every unit of your module A, then B and then C, and that we have done in form of most important MCQs. It means in form of questions. So we have discussed some basic questions, as well as we have discussed the advanced questions, so that you will know what kind of level of paper can be seen in the paper in May 2024. So this Achiever series of your helps you to know what kind of approach should be there while you are preparing for your May 2024 paper. Second, it also helped you to know like in how much depth it is important to study a particular topic, because when you are studying a topic, it will be covering a lot of things, but what is most important and what is not important, that is very much important to understand. Because if we talk about IE IFS, we have 45 units, and out of 45 units, we cannot lose any particular unit or module here. Each and every unit and module have to be completed by us. And when you are completing the modules, it means each and every unit have to be completed. So around 700 pages book have been given by IIBF that we have to cover for IE IFS. And in that 700 pages, it's not like that every page have the same importance in the paper, like some limited papers have, or I can say the content have, because there are certain topics that definitely you will see in the paper, and there are some topics that might not be there. So how to identify what to study, what not to study? The best way is first see the test paper, or you can go through with the recollected paper or recollected questions as well. Okay, you can go through with the recollected questions as well to know like what kind of a study or how much study or how much depth concept you have to remember. Okay, so this is what we are doing in this Achiever series. So do make sure you watch each and every unit session in which we have discussed module A, B, C, and right now we are discussing D. So the series started from 4th of December. If you haven't watched the earlier sessions, then what you can do, simply go to the Office of Adda247 YouTube channel, go to the playlist, and playlist you will find all the sessions available there. Okay. Now let's start today our class number 4th related to your module D. So module D class 4 we will be discussing today. So let's start, and you can see the topic we are going to discuss today is first the fixed income market, debt and bond markets, and the second topic we are going to discuss is foreign exchange markets. So you know module D is the biggest module in your IE IFS. It starts from unit number 29 and it goes till your 45 unit. So the biggest unit is module D. Biggest not only in the sense of that maximum units are there, biggest also in the sense that a lot of concepts are there. The subtopic, the sub-concepts that you have to study, they are maximum in the module D. If you are studying one particular unit here, you will find 25 to 30 subtopics are there that you have to read. And that also very carefully, it means in very depth, because the questions will definitely be seen from there. Okay, so that's what we're talking about from unit number 29 to 45 we have to discuss. And if we talk about these two units, it is the unit number your fixed income market, debt and bond market, and then is foreign exchange markets. That's your module D we are talking about. It means class number 32, or sorry, unit number 32 and 33 we are going to discuss. Okay, so let's start. Before moving forward to the questions, let's understand what this topic is actually about, and then we will move towards the MCQ like we do every day. So first of all, when it comes to the fixed income market, what is the meaning of fixed income market? It's simply a market where you find that the earning you are going to have after the investment is already decided. It's already fixed, or I can say prefixed it is, like in the debt market, in the bond market. So debt market is what? The market in which a kind of money you are providing to the institutions or companies or corporates, which they are using to expand their business, they are using to continue their businesses in the market. But on that amount of money which you have given them, they have to pay a fixed rate of interest in a fixed maturity period. And that's why it is called as a what? It's as a debt market. Like in bonds, your maturity period and your rate of interest will be prefixed. It means this is the kind of market where the obligation of payment will be there. Obligation of payment will be there. It means what? It means if you have taken money from fixed income market, you have to return back that money to the investors. Okay, unlike in share market, what happens? In share market, it depends on your company's profile, or I can say the company's market value. If company is earning profit from the market, then company will give you the profit. If company is facing loss, then you also have to face loss. This is where we talk about your fixed income market. Here, there is a liability on a company that the company have to return the money after a certain maturity period with a certain rate of interest. Okay, that's your fixed income market. Clear? Now, the second we have foreign exchange market. Now, what is foreign exchange market? Foreign exchange market is simply a market where you can see the trading on foreign currency is going on. And who maintains or who manages the foreign currency reserves in India? RBI, obviously. So, the regulator of foreign exchange market will be who? RBI. So, in the foreign exchange market, simply trading will be seen on the foreign currencies. That's what we'll be talking about in the foreign exchange market. So, in the foreign exchange market, RBI manages this market, RBI regulates this market, but on the basis of which legislation? That will be your FAMA 1999. It replaced the FARA 1973 that was first introduced in 1947. In which there used to be certain restrictions on the exchange of foreign currency. So, the FARA have been replaced by FAMA, and the FAMA is providing Foreign Exchange Management Act. It is simply managing the foreign currency. It's doing what? It simply manages the foreign currency. Okay, now next. So, this is the basic of your topics, what they are talking about. Now, let's move forward to the questions, and we will be discussing questions here, and you have to answer which of the following option is correct. Also, do make sure you are counting how many answers you are giving correct, because in the end of the session, I will be asking you how many answers you have given correct. Okay. So, first is saying which of the following securities are not eligible in RBI retail direct scheme. That is RDS, Retail Direct Scheme. So, which of the following securities are not eligible in the RBI Retail Direct Scheme? So, when it comes to RBI Retail Direct Scheme, this is the scheme introduced by RBI, obviously, for the retail investors. Those persons, those investors who want to invest in government securities, right, like the retail individuals, or I can say individual persons like us. If you want to invest in government securities, so we will be getting facility under this particular scheme that you have to visit only one platform where you can easily find out the government security and you can easily invest, or you can easily purchase or sell the security. So, that's why the retail direct scheme was introduced by RBI to make the government security trading easy for the retail investors. Okay, so as I keep saying, it is for the government security. It means treasury bill is a part of RDS. It means central government securities is a part of RDS. It means sovereign gold bonds are the part of RDS. Which of the following is not part? The government bonds, because it is part of your capital market, or I can say the debt market. Actually, debt market is the sub part of your capital market. So, you can see it is the part of your debt market. Okay, right answer will be your C. Next question. In which type of auction is the phenomenon of winner's curse observed? In which type of auction is the phenomenon of winner's curse observed? First is saying multiple price auction, second is saying Dutch auction, third is saying uniform price auction, and fourth is saying English auction. So, let me know which of the following is correct here. A, B, C or D? A, B, C or D? Which of the following is correct? And the right answer will be your multiple price auction. So correct answer is multiple price auction is the phenomenon of your winner's curse observed. So right answer will be your A. Okay. Next question. In which year were primary dealers introduced? So when it comes to the primary dealers, why they have been introduced and by whom they have been introduced? So first of all, whenever we talk about financial institution, we always divide financial institution into two parts. The first part talk about the banking institution and the second part talk about the non-banking finance institution. Okay, so banking institution covers first of all RBI, who is the regulator of your financial market, or I can say the not financial market, the banking market regulator. And RBI divided banks in India in two categories, that is scheduled bank and non-scheduled bank. Clear? When it comes to the non-banking financial institutions, they have been divided into three categories. The first one is All India Financial Institution, that is your NABARD, SIDBI, Exim Bank, NHB, etc. Second, we have non-banking financial companies, NBFCs. And the third, we have primary dealers. So primary dealers were actually introduced by RBI. They're part of non-banking financial institution. They have been introduced by RBI for the selling purchasing of government security. Okay. So why they have been introduced? They have been introduced for the selling purchasing of government securities. And the right answer for this question will be 1995. The right answer will be your 1995. That's the primary dealer. Okay. Now, next question. So right answer is what? It is C. Next. Next question is talking about which of the following bond theorems is not correct. So you will find in the fixed income market when you talk about the bond market, so bond theorem is one of the important topic and definitely one question will be seen from this topic. So let me know which of the following is the not a right bond theorem. So there are four bond theorems. Out of these four options, which of the following is not a right theorem? A, B, C or D? Okay. So the right answer will be, first is saying the price of bond is inversely related to the change in the interest rate. That is true. They have inversely related. Second, the increase in the price of bond when the interest rate goes down by a certain percentage is greater than the decrease in the price when the interest rate goes up by the same percentage. This is also true. Third is saying longer the term to maturity of a bond, lower will be the price sensitivity. No, it will be higher. Higher will be its price sensitivity. Okay, so longer the term to maturity of a bond, higher will be its price sensitivity seen. So right answer will be C, because it is not a correct theorem. This is not a correct theorem. Okay, fourth one is correct, that between two bonds of same maturity but different coupons, the bond with the lower coupon will experience more price sensitivity than the with higher coupon. So right answer is C. This is wrong. And what is wrong here? Simply this. Higher. It should be higher in place of lower. And do remember these four theorems you have to remember. You have to remember that. Direct question can be asked like this. Okay. So it's a 1 mark question you will see in the paper. And it's very easy to get the 1 mark when you have understand the fourth theorem. Now next thing. What will be the correct nomenclature of a central government security issued 2018 for the 10 years period with the coupon of 7.85% per annum? So first of all, we have discussed dated government security. I guess you have seen the session. We talk about dated government security, and dated government security is for maximum period will be 40 years. Okay, so when the government issue dated government security, government named the security as a dated government security. Why? Because the government also mentioned there the date of maturity. Let's say, for example, if I am purchasing security today for the next 10 years, it means after 10 years when my security will be mature, that date will be written on my paper. Paper means that document, that bond. That's why we call it a dated government security. Clear? Now let's say, for example, the date is mentioned here. That's why it became the dated government security. Now how it will be represented? So first of all, let's eliminate the options. The first option is saying 2018. It cannot be right. Reason, because you have issued security in 2018, it will mature after 10 years, so it can't be 2018. So the first and third option can easily be eliminated. It can be either B or D, but the B is true. First, you have to mention the interest rate, or you can say coupon rate, that will be given by the government. Second, you have to mention who is issuing the security, and the third, the maturity year have to be defined. So the right answer will be your B option. The right answer will be B option. Why A and C is incorrect? Because it is saying the issuing year. No, it do not represent the issuing year. It represents the maturity year, when the security is going to be mature. Okay, next question. What is the threshold transaction limit under FX retail platform with zero fee? What is FX? Foreign exchange retail platform. What is FX? Foreign exchange retail platform. So when we talk about foreign exchange retail platform, it is a platform where the trading in forex, or we can say foreign currency, is allowed. That is known as your FX retail platform. And without fee, it means zero fee, means for a certain amount you are transacting on this platform, you do not have to pay fee. You do not have to pay any kind of charges. After a certain value, charges will be taken. So the right answer here is $50,000. Up to $50,000, there is no fee in FX retail platform, but after 50,000, the charges will be taken. So right answer here is B. Okay, right answer is B. Next question. It is saying, which of the following is not an enforcement authority for FAMA regulations? Which of the following is not an enforcement authority for FAMA regulations? Is it RBI? Is it Enforcement Directorate? Is it Ministry of Commerce? Is it Ministry of Finance? So you know, when it comes to the FAMA Foreign Exchange Management Act, FAMA Foreign Exchange Management Act, introduced in the year 1999. Okay, this act was passed in 1999. So it's very obvious RBI will be there. Enforcement Directorate will be there in case of any non-compliance of the legislation or obligation. Then Ministry of Finance will be the part, but not a Ministry of Commerce. So the enforcement authority under FAMA will be RBI, ED and Ministry of Finance, but not a Ministry of Commerce. So the right answer will be C. Okay, the right answer will be your C. Next. Which of the following are not participant in the forex market? So forex market, you know, it is a foreign exchange market. So which of the following is not a participant in the forex market? A, B, C or D? So first option is saying brokers, second is saying commercial banks, third is saying central banks. So it's very obvious how you can say that central bank will not be there. Central bank is a party. Commercial banks will be the party. Brokers will be the participant, but not the jobbers. Jobbers are not allowed to participate in the forex market. They are not allowed to participate in the forex market. So who are jobbers? They are a person or a company that buys large quantities of goods and to sell to the other companies or directly to the public. Okay, so what they do, they purchase the securities or whatever bonds or whatever we are issuing in a large amount, and then they themselves sell to the public directly or to the companies. Okay, so jobbers are not the part of your forex market. Next. Which of the following are the characteristics of forex market? Which of the following are the characteristics of your market? First is saying promptness. Which market? Forex market. Availability, flexible regulation of the trade arrangement system, value, market trend. So out of these, what do you think, which of the following is the characteristics of the forex market? A, B, C or D? A, B, C or D? Which of the following is the characteristic? Okay, so the right answer will be your all of the above. All are the characteristics of the forex market. And do remember, forex market always regulated by RBI. Okay, next question. FDI has a number of functions. Which of the following are included in the function of FDI? So when it comes to the FDI, it's a very important institution. It stands for Foreign Exchange Dealer Association of India. It's what? It's a Foreign Exchange Dealer Association of India. And this Foreign Exchange Dealer Association of India is a self-regulating organization. It helps RBI, it suggests RBI what should be done for the development of the forex market. Okay. So first is saying issuing of guidelines and rules for handling of foreign exchange business. Second is saying training of bank personnel in the areas of foreign exchange. Third is saying accreditation of forex broker. Fourth is saying advising, assisting member bank in settling issue matters in their dealings. Then representing member banks on Government, Reserve Bank of India, other bodies. Announcement of daily periodical rates to the member banks. So which of the following is the function that performed by FDI? And what is FDI? Foreign Exchange Dealers Association of India. So let me know which of the following is correct. A, B, C or D? And the right answer will be your D, all of the above. All are the functions that will be performed by the FDI. Good evening everyone, welcome to the official YouTube channel of Officers Adda247. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So in the last class we have discussed module D, and the same we are going to do today. We are going to discuss module D today. So this is our class number 5 related to module D. And if we talk about IE IFS subject, you will find that in IE IFS subject there are 45 units. How many units we have? We have 45 units, that is divided in 4 modules. So there are 4 modules and 45 units are there in our particular IE IFS subjects. And if I talk about module A and B, it belongs to Indian economy part. And module C and D, it belongs to Indian financial system part. When it comes to the Indian financial system, it has 60% of weightage because it have a more syllabus comparative to the A and B module. If I talk about A and B module, it have 40% weightage in the paper. But on the basis of weightage, we are not going to prepare for our paper. We are going to prepare our paper according to each and everything that have been given under the syllabus. It means each module, each unit, each subtopic have to be covered. You cannot leave anything in the paper. You have to do everything that is available in your syllabus. Okay, so this is what you're talking about. There are 4 modules, and out of the 4 modules, the 3 modules we have already discussed. Module A, Module B and Module C have been completed. And then we came to the Module D. And in Module D, we already have 4 classes. This is the class number 5th, and this you can see the topic we are going to discuss today is interconnectedness of markets and market dynamics. And the second one is merchant banking services. If we talk about Module D, it starts with the unit number 29 and ends to the unit number 45. So from 29 to 45 unit, you have to study the Module D only. It have a huge syllabus. And it's not on the basis of number of units I'm talking about. On the basis of content these chapter, these units cover, that's what I'm talking about. A lot of topics will be there. Topics means the subtopics, then lot of concepts will be there, right? So that's why you have to make sure you complete C and D module first, so that you will get more time to revise these content. You have to do the multiple revision so that you will not forget about the topics. So let's start today's session. Before moving forward, those candidates who are new to the channel of Officers Adda247, I would love to inform you all that this is the channel where you will find solution of all your queries regarding JAIIB, CIIB, bank promotion exams. Apart from that, if you are preparing for JAIIB May 2024, then these Achiever series are really helpful for all of you. And to join these sessions, you have to meet me on Officers Adda247 from 7 p.m. to 7:30 p.m. Monday to Saturday. This is for IE IFS subjects. For PPB, you have to join the session at 6 a.m. Okay, apart from that, other subjects are also going on. And if you are joining this class for the first time, and if you want to check the other sessions, because we have started this series from 4th of December, it means a lot of time we have covered till now. And 3 modules have been covered. So if you want to check those sessions, those classes, go to the playlist section and all the videos will be available for you to watch in the form of recording. Okay, so let's start. So first, before moving towards the question, we will be talking about what this topic is actually means, and then we will move to the questions. So first, interconnectedness of markets and market dynamics. Interconnectedness of market means when you talk about that the markets have been connected to each other, or they have some kind of or some sort of connection among them, that is known as your interconnectedness. Okay, so like the financial market, we know we have a lot of financial market. We have capital market, we have money market, we have debt market, we have insurance market, we have pension market. Apart from that, we have your securities market, forex market, etc. All these are the market that's a part of financial market, and all these market are interrelated to each other. Like if we talk about money market, the money market is actually dependent on what? On the monetary policy rates. If you talk about capital market, it means share prices. The stock market actually depends on the government's budget. Every year when government represents budget, it somehow definitely affects the market. Apart from that, if I talk about your forex market, actually provide some kind of effect on your money market and capital market. Your government security scheme actually provide certain kind of impact on your other markets, because it's a more secure market. If the government started providing higher interest or the coupon rate on the government security, people will not invest in the other markets, because in other market there will be definitely a risk. In some market risk will be high, in some markets risk will be low, but there will definitely be a risk. But in government security market, no risk will be seen. Okay, apart from that, next we have merchant banking. So when you talk about merchant banking, there are a lot of types of banking. So we have discussed in module C, if you are regularly following my sessions, then you know we have discussed in module C like what Banking Regulation Act actually states, that what is a bank and what is a banking. So bank is simply institution, a lawful organization, and banking is the services which bank provides. So the services of banking have been defined as accepting deposit from public for the purpose of lending and investment, lending or investment, which should be repayable and withdrawable by using the right set of documents like the check, demand draft, etc. So this is the business of banking defined under the Banking Regulation Act 1949. So banking means simply the service you are providing to the customer, and bank provide different types of services to the customer. So that's why we have different types of banking. We have virtual banking, we have online banking, we have para banking, we have universal banking, we have merchant banking, we have door-to-door banking, relationship banking, Islamic banking, okay, etc. A lot of types of banking are there. Out of all those types of banking, Only merchant banking is one of the banking which is not regulated by RBI. It is regulated by SEBI. Only merchant banking regulated by SEBI, and all the other types of banking will be regulated by RBI. So merchant banking is actually a kind of financial services in which company provide consultancy plus financial services. Financial services means it provide loan to the corporate, to the wealthy persons, wealthy individuals, high net worth individuals. And second, consultancy means it gives advice to the corporates how to expand their business, where to invest, where not to invest, what project is good for them, etc. Right, so these kind of services are provided by your merchant banking that is regulated by SEBI. I guess the basic understanding of both chapter is clear. This is our class 5 of your module D. So now we will be moving forward in form of questions. Let's discuss more about these two chapters. So first is talking about which of the following markets have inverse interconnectedness. It means opposite interconnectedness. There are certain markets in which you will find the same kind of changes have been seen. Like if one market there is a growth, the other market will also grow. But the combination of two markets have the inverse interconnectedness, inverse relation, opposite relation. Is it money market or policy rate? Is it forex market or capital market? Is it money market or bond market? Is it policy rates or credit markets? Let me know which of the following two markets have the inverse interconnectedness. A, B, C or D? Okay, so the right answer will be your B, forex market and capital market. Forex market is regulated by RBI, capital market regulated by SEBI. Forex market deals in the foreign currency transaction or trading, I can say. Capital market deals with the long-term selling and purchasing of securities that cover shares, bond, debentures, etc. for the long-term capital raise. And these two markets have an inverse relation market. Okay, they do have the inverse relation. Now, the second question. Which of the following is the opposite of a floating exchange rate regime? Opposite of floating exchange rate regime. So, floating exchange rate regime, you can simply understand that it is the, it keeps changing. The exchange rate keeps changing. That is known as floating exchange rate regime. Okay, so which of the following is opposite of a floating exchange rate regime? Is it a pegged exchange rate regime, free exchange rate regime, correlated exchange rate regime, or none of the above? A, B, C or D? So the right answer here will be your A, that's pegged exchange rate regime. This is the opposite of floating, because in floating it will keep changing the exchange rate. What is exchange rate? The rate at which currencies will be exchanged, that is known as exchange rate. When this keeps changing, that is known as your floating exchange rate. And pegged exchange rates in which it will be fixed by the authorities. Next question. How many countries are member of Asian Clearing Union? Definitely one question will be seen from this topic. Asian Clearing Union. When you talk about Asian Clearing Union, this is simply provides you the payment settlement service. And it provides you what? It provides you payment settlement service, that is your Asian Clearing Unit. So how many members are there? 7, 8, 9 or 10? India is also a member of ACU and the total members we have is 9 members. How many members are there? 9 members are there. Do remember that. Okay, in detail when you are going to study, you will find out the name of the members, like Bangladesh is there, India is there, Pakistan is there, Hana? So you have to remember the name of all the 9 countries. Now, which of the following is not one of the different levels of integration of financial market? So when you talk about financial market, you know all the type of financial market we have. that we have discussed in the starting of the session, but the question is asking not one of the different level of integration. So when financial market integrate with each other, there are 3 levels defined in which they integrate to each other, out of which there are 4 integration names have been given to you, out of which 1 will be wrong. First is saying domestic, second is saying vertical, third is saying regional, fourth is saying international. So at what level we do not find integration of financial market out of these 4? So the right answer is actually your vertical integration. Your vertical integration is not a type of or the level of integration of financial market. The domestic is there, regional is there, international is there. You can call it a global integration also. So the 1, 3rd and 4th, yani ki A, C and D, they are the type of integration. Okay, so right answer will be B. It is not the one. Next question. Which of the following is not a reason for interconnectedness of financial market? Not a reason for interconnectedness of financial markets. Mobility of capital, profitability parameter, technological development, harmonization of prudential regulations. So now you have to answer which of the following is not a reason for interconnectedness of financial markets. A, B, C or D? A, B, C or D? Okay, so the right answer is mobility of capital will be there, technological development will be seen because of the interconnectedness of markets, harmonization of prudential rules or regulations will be there, but not a profitability parameter. This is not a reason of having interconnectedness of financial market. Okay, so the right answer will be B. It is not one of the reason of interconnectedness of financial market. Next question. Which of the following is not the responsibility of a monitoring agency? Which of the following is not the responsibility of a monitoring agency? First, make arrangement to ensure the monitoring of issue proceed. Keep a track on the expenditure incurred from the amount collected. Reason for delay in implementation to be reported to RBI to ensure that the government statutory approvals related to the project as disclosed in offer document are being compiled with. What do you think? Which of the following is not a responsibility of a monitoring agency? Let me know. Not a reason or not a responsibility, sorry. So which of the following is correct? Okay, done. And the right answer is to give the reason for delay in implementation to be reported to RBI. It's a monitoring agency. It's not a reporting agency that have to give the reason why this have been delayed by us. So right answer will be your C. It is not one of the responsibility of a monitoring agency. Right answer will be your C. Okay, next question. Next we have, what is the minimum capital requirement for a merchant banker? Minimum capital requirement for a merchant banker. Is it a 10 crore, 5 crore, 50 lakhs or 10 lakh? Let me know. Okay, 10, 5, 50 or 10. Okay, so right answer is actually 5 crores. Actually, if you remember, in module C, we have also discussed what is the minimum capital requirement to open a certain type of bank. For public sector bank, for private sector bank, for foreign bank, for universal bank, for small finance bank, for payment bank, etc. That we have discussed. Same, the question here is about merchant banker. And so in case of merchant banker, it is required 5 crores. Okay, next question. Which of the following categories of merchant banker can handle issue management? So do remember, if you want to become a merchant banker, like if it means the firm want to become the merchant banker, they have to be registered with SEBI. Okay, but when you are going for the registration, you have a 4 category. Out of those 4 category, you can register in one of these. So there are 4 categories. Do also remember this. Out of these 4 categories, which category talk about your issue management? Category 1, category 2, category 3 or category 4? And the right answer for this question will be your category 1. The category 1 is actually the type of merchant banker which handles the issue management. Okay, so right answer will be your A. Now the next question is, how many categories of merchant banks are there? I have just told you. How many categories are there? Only 4 categories are there. So right answer will be your B. Okay, there are 4 categories of merchant banker. Do remember that. Category 1, 2, 3 and 4. Next question. Identify the statement which is not true. It means incorrect. It means false statement we have to find out. First is saying merchant banks are regulated by RBI. So I guess we have found our not true statement, or I can say the incorrect statement, because I have just told you only merchant banking is the only type of banking which is regulated by SEBI. All the other are regulated by RBI, and because we are talking about merchant banks, it cannot be regulated by RBI. It will be regulated by SEBI. They are mainly undertake fee-based business only. Okay, the merchant banks primarily assist in what? In raising capital. Like it advise you from where you can raise capital. If you want to start a business, you can have a capital from equity or from debt market. Okay, when it comes to the equity market, it means you can raise capital from share. From debt market, you can issue bond or you can issue debenture. But apart from that, one more way is there, and that is by taking loan from the bank. So how much money should be taken from the equity or how much money should be taken in the form of debt, that decision for any corporate, the advice given by the merchant bankers. So right answer here will be A, that merchant banks are regulated by RBI. That's definitely a wrong statement. Good evening, everyone. Welcome to the official YouTube channel of Officers Adda247. So first of all, let me know how are you all. Also, let me know as audio, video both are okay. Are we good to go? So this is our next session regarding your module D. In the last class, we have discussed module D session, and today also we are going to discuss the module D. If we talk about IE IFS subject, you all know that we have 45 units. Total 45 units are there in this particular subject. Out of these 45 units, we have discussed already around 35 units, and the remaining 8 or 10 units are there that we have to discuss. Now when it comes to the IE IFS subject, this is your paper 1. It have 4 modules, 45 units. The starting 2 modules are the part of your Indian economy, and the last 2 modules are the part of your Indian financial system. So when we are studying Indian financial system subject, what are the points that we should make sure that we remember before starting the preparation? First of all, do always make sure you go with the concepts, because the concepts is very much important. Without understanding the concept, if you try to mug up the concept, let's say for example you have studied Indian economy in your graduation or PG or something. So you know certain terms. In that situation, first 2 modules will be very easy for all of you because it is related to the economics or basic economics it is that you have to study. But in the module A and B, you have to remember the data related questions. like what is the contribution of India, what is the contribution of agriculture sector, what is the contribution of India and China in the global GDP, in the global trade. So these kind of questions can be seen in the paper. So when it comes to Indian economy part, you have to understand the theory part as well. Like if you are talking about national income, per capita income, GDP, do not try to mug up the definition of them. Just try to understand why we are calculating the income of Indians only, or why we are calculating the income of Indians in India and abroad, and why we are calculating income of Indians and foreigners in India. So these concepts have to be cleared. If you do not clear this concept, somehow you won't be able to answer the statement based question, the conceptual question. And trust me, maximum type of questions will be seen in the paper is a statement based question. Okay. Second thing is revision. Because the syllabus is very vast, you have to go through the revision. Okay. Third, practice. And practice, do make sure once you complete the particular topic, do make sure you practice the topic wise test. Then once you have completed the module, then do make sure you do the module wise test. And the last, when you have completed your syllabus, then go with the full length test. Okay, so now all these things you have to do to clear the Indian economy, Indian financial system subject. And trust me, this is a very easy subject, but the problem is we are taking a wrong way to cover this subject. So it's an easy subject. When you start reading this subject, you will find that this is easy, it can be done, it is doable. But how to do all these things, where you will find all these things which is required to clear the paper. So today at 9 p.m. Today at 9 p.m. I am starting Victory Batch with the subject Indian Economy and Indian Financial System. So 9 to 10 p.m. 9 to 10 p.m. we are going to have our first class. That will be orientation class of your Victory Batch. Okay, and this will be available on YouTube as well. If you have not enrolled yet on YouTube, you can check the orientation class. Tomorrow you can check the demo sessions, and then you can decide you want to enroll or not. And if you are one of them who regularly watching my sessions, who regularly join these Achiever series, then you already know what pattern of teaching or how I explain the thing. So I guess now you are aware about my teaching skills, or how I am teaching, or how I make concept easy for you to understand. So if you are already know about this, then do make sure you enroll in the Victory Batch, because now very less time is remaining and we have to make sure that in May 2024 we clear this paper. It is very much important for us. Okay, so that's why I am telling you that enroll here in the Victory Batch. And right now 80% discount is also going on if you use the code Y496. And today I will be meeting again on YouTube with all of you from 9 to 10 p.m. Okay, so see you all, and the other details I will let you know in the end of the session. So let's start. This is our module D, class number 6. So we have completed A, B, C, and in D module we have already done the 5 classes. Today it's a 6th class. So let's start. The topic we are going to discuss today is a derivative market and your factoring, forfeiting, trade receivables discounting system, TREDS. Okay, so first these are the 2 units we have to discuss. These are from module number D, or module D of yours. So let's discuss this first, as we already always do. First we will understand the topic and then we will move forward to questions. So first of all, let's talk about derivatives. What is derivatives? So we can simply say that derivative is a product. Derivative is a product whose value will be derived from basic variables, and these basic variables are called underlying asset. These basic variables are called underlying assets. This is what our derivative is. So derivative can be any product. Derivative can be any product whose value we are deriving from the basic variables, and those variables, yeah, are your underlying asset. They are known as what? They are known as the underlying asset. So now if we take example of the same, for example, let's say I have purchased the share of Adda247. So Adda247 decided to be listed on the share market to raise capital from the market, and the company is issuing its shares, for example. So I purchased the share of Adda247. Let's say I purchase only one share, and the price of one share is 500 rupees. Okay. Now if I ask, let me know, I will earn profit on this investment or loss. I will be getting profit on this particular investment, or I have to face loss on this investment. Let me know. What will happen in this situation? So you will say we can't say, because we do not know the price of share is going to rise in the future or is going to fall. So on what basis we will be defining the profit and loss? On the basis of index. Index is what? Sensex and Nifty. If the index value is increasing of Adda247, it means I am going to get the profit on the investment, and if it is falling, it means I have to bear the loss. So it's very simple. I have purchased the share, and the profit and loss of my trading depends on the market. It depends on the index. It depends on the company will get profit or not from the market. So it means now if we define the share is what? Share is a product, and the value of share we are deriving from the index, that is known as your underlying asset. That is known as your underlying asset. So derivative can be any product whose value will be derived from the basic variables. From other variable, you have to derive the value of the derivative, and in that situation it will be known as underlying assets. I hope it is clear to all of you. Okay, that's a derivative. Now let's talk about the factoring. Factoring, forfeiting and trades, they all are same. Okay, they all are same, but a little bit difference is there. So what happened? Let's say there is a seller and there is a buyer. Okay, the two parties are there. Now seller have sent the goods to buyer. It means the seller have done the shipment of goods. Shipment of goods. Now it's the buyer's turn to make the payment. So buyer have issued a certain document and said on that document, I will make payment on 26th of February. Okay, it can be a promissory note, it can be bill of exchange, whatever document it can be simple check on which the date have been written 26th of February. Any document it can be. So buyer has given the document to the seller, or the payment in form of a certain document which states that the payment will be done on 26th of February. Now the seller got another order from the another party, but he was waiting for the payment, because for raw material purchase, to give salaries to the labor, okay, to pay taxes, etc., he needed money, he needed capital. So he was thinking, I will do the shipment of goods, I will get the money, and from which I will start the another contract. But now what happened? He will get payment on 26th of February. So what he will do? Now there will be a third party, that's a factor. Factor can be your bank, or it can be any financial institution like NBFC can also become the factor. Now seller will go to the factor and show him the document and ask that I need an immediate cash on behalf of this document. Now the factor will check the credit worthiness of buyer, because at the last payment will be received from the buyer only, na? So factor will check the credit worthiness of a buyer. After that, it will provide immediate cash to the seller. How much? Around 75 to 80% of the contract value. Okay, whatever values document have been issued here, of that value 75 to 80% immediate cash will be given to the seller. Now seller will start its own another trading or what. Now what happened? On the due date, the factor will go to the buyer and ask for a payment, and the buyer will make payment to the factor on a due date. This is factoring, this is forfeiting, this is trades. So what's the difference? Difference is that factoring is mainly used for the domestic transactions. Forfeiting is used for international mainly. Okay, and in factoring, I told you up to 80% will be given as an immediate cash. In forfeiting, up to 100% will be given to you. Now, the threats is the same, but it is only for MSME, micro, small, medium enterprises. Otherwise, everything is same in the factoring, forfeiting, and threats. Their types are also same, but we are not going to discuss the types here. That you have to study in the conceptual classes. So I guess now the basic understanding of the topic is clear. Now let's move forward immediately on the first question, that is talking about in India, which was the commodity in which derivative first originated. Acha, also let me know in the comment section, is the terminology is clear to all of you? And answer this question. Okay, so the first time in India, the derivative first originated with which particular commodity? It was originated with cotton. So right answer will be your D, cotton. Okay, next. From among the following, who is not a participant in derivative transaction? So out of these, who is not a participant in derivative transaction in the derivative market, you can say? Arbitrator, guarantor, hedger, or speculator? A, B, C, or D? And the right answer here will be your guarantor. No guarantor can become the part of the derivative market. Arbitrators will be, hedgers will be, speculator will be, and only these three derivative transaction participants are there. And in the chapter when you study, only 3 participants are there in which guarantor is not involved. Next. From among the following, identify the function of derivatives. First is saying price discovery, second is saying lowering transaction cost, third is saying increasing leverage, fourth is saying all of the above. So out of these, which of the following is the function of derivative? A, B, C, or D? Price discovery, lowering transaction cost, increasing your leverage, or all of the above? A, B, C, or D? Okay, so the right answer here will be all of the above. In the derivative market, you will see there is a price discovery. It lower the transaction cost, it increase the leverage also. So right answer will be your all of the above. Next. Which of the following is not an OTC derivative? So when it comes to the derivative market, there are 2 types of derivatives. First, you have over-the-counter derivative. Second, we have exchange-traded derivative. In over-the-counter derivative, there is no mediator party. Only the seller or buyer will be there. Okay. So one is ready to sell and the another one is ready to purchase, and they sign a certain contract with each other, that is known as over the counter. Because now there is no mediator, it covers a counterparty risk. In the over the counter derivative, you will find there is a counterparty risk because there is no authority, there is no monitoring agency or anything. So the party in the future might be disagree to complete the contract. Okay, because let's say if they are getting in the future, acha, always remember derivative trading happens only on future date. All the derivative trading goes on a future date. Okay, so let's say they agree right now to sell and purchase with each other, but in future they have got best deal from the other party. So there is a chances they will breach the contract, and that's why there is a counterparty risk. When it comes to the exchange traded derivative, here between the two parties there will be a exchange. Exchange will be, it means it can be stock exchange, BSE, NSE, multi-commodity exchange, anything. So the exchange will be there which initiate the contract between the two parties. Now because this exchange is there and this exchange made both the parties to maintain a margin money with the exchange so that they do not default. In that situation, in exchange traded derivative, there is no counterparty risk and they are standard, they are secured. Okay, so do remember, over the counter derivative is risky because there is a counterparty risk. Exchange traded derivatives are a standard because there is a stock exchange mediator who won't happen the default in the contract. Okay, so now which of the following is right? Which of the following is not an over the counter derivative? In swaps, there is a risk. In exotics, there is a risk. In forward contract, there is a risk. But the currency future or the future contracts are standard. They are not from the over the counter derivative. So the right answer will be C. Okay. Next question. If a company wants to borrow $1 million for a period of 3 months, 6 months from now, what type of forward rate agreement should it buy? FRA, forward rate agreement. So company wants to borrow $1 million. How much money? $1 million. And that $1 million company want to purchase after 6 months for the period of 3 months. Okay. So what type of forward rate agreement they have to purchase? Now what is forward rate agreement? It is a forward contract on the interest rate only. Okay. So now because the company wants to buy money for 3 months. For how many period? For 3 months company wants to borrow the money. Okay, so and after how many time? After 6 months. So this contract, this agreement will start after 6 months and it will end after how many months from now onwards? After 9 months, because 3 months period is there for which the company wants to raise the capital. So now start and end. When your contract will start and when your contract will end, that represents the forward rate agreement. So right answer will be your C, 6 multiplied by 9. 6 into 9. So always remember, start, agreement start month, then agreement ends month will be written in the forward rate agreement. Okay. Now, factoring is a facility for which of the following? Maintaining of sales ledger, maintenance of receivable, debt collection, all of the above. So factoring can be done for any of these above. Okay, because it is simply provide you the immediate cash. So right answer can be D. Next. Which of the following is not a form of international factoring? So in the international factoring, what happened? I have given you the example with one factor. It can be bank, it can be financial institution. When there is an international factoring, it means there can be two factors. One from India and one from abroad, whatever country you are transacting with. So there are multiple types of factoring is available. So single factor is there, two factor is there, export only factor is there, but the 3-factor factoring is not a part of your international factoring. So the right answer will be your C. Okay. Now, a forfeiter gives an undertaking to execute a specific forfeiting transaction at a firm discount rate within a specified time. What is the fees for such undertaking known as? So forfeiter, you will means the seller will get up to 100% immediate cash. And when it comes to execute a specific forfeiting transaction, what fees will be charged? Is it an undertaking fees? Is it a commitment fees? Is it a blocked fees? Or is it a financial fees? So your right answer is it's a commitment fees. It's what? It's a commitment fees. Right answer will be your B. Next question. Which of the following is the characteristics of a forfeiting transaction? Characteristics of forfeiting transaction. First, it's a short term. Second, it can be with or without recourse. Charge include commitment charges. It is commonly for domestic business. So, which of the following is a characteristics? Okay, so it include commitment charges, that is true. Hana, it include commitment charges, that is true. It can be with or without recourse. It can be with or without recourse. That's a type of your forfeiting, but this is not a characteristics. Hana, this is what? This is not a characteristics. It is short term. This is true. Charge include commitment charges. This is true. It is commonly used for domestic business. It is true. But the second one is not true because it's not a characteristic. It's a type of forfeiting. And the same type of factoring will be seen. The factoring will have the same type. The with recourse and without recourse factoring. So right answer here will be your B. Achha, it is asking which of the following is a characteristic. So the right answer will be charges include the commitment charges. Right answer will be your C. Charges include the commitment charges. Next. In threats, when the transaction is initiated by the corporate buyer, what type of transaction would that be? In threats is for what? MSME. Hana, when the transaction is initiated by a corporate buyer. So till now we have discussed seller will go to the factor, but now here we are saying that buyer is going to the factor. So this kind of factoring will be known as what? It is known as reverse factoring. So threats is the type of factoring only, nothing else. But it is for whom? It is for MSME only. That's why the name have been given threats. Okay, and when buyer initiates the factoring or threats, it will be known as reverse factoring. So the right answer will be your B. Okay. One second. Okay, so these are the questions we have discussed today. Good evening everyone, welcome to the official YouTube channel of Officers Adda247. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So in today's session we are going to discuss another MCQs, or I can say most important MCQs from your module D. So when you talk about IE IFS subjects, we have 4 modules, 45 units in this particular subject. And when you talk about IE IFS, it's the subject that have been created by combining 2 subjects of yours, that is Indian economy and Indian financial system. So module A and B talks about Indian economy, module C and D talks about Indian financial system. So A, B and C we have completed till now, and we started D. Today it's the class number 7 from the module D. So what we are doing actually in this session, every day we are discussing certain number of questions in form of MCQs, like the paper is going to ask in the May 2024, and we will talk about the concepts related to the topic, and in the end we see like how many answers we have given correct. And this series is going on since 4th of December, or first we can say the first class we started on 4th of December, and now we are regularly having these session Monday to Saturday. So if you haven't seen earlier session, the module A, B, C and the 6 classes of module D, if you haven't seen them, you can check them on Officers Adda247 YouTube channel. In the playlist, all the sessions recording is available that you can watch whenever you want. Okay, and I would suggest to start your preparation and to give a kind of guidance to your preparation. These sessions are really going to help you know what to study, how much to study, and from where to study. Okay, so let's start. Apart from that, one more information. Yesterday I started your batch of IE IFS. So Indian economy, Indian financial system, new batch started. That's your victory batch. The batch name is what? It's a victory batch. And in victory batch we have started IE IFS yesterday only, that is from 6th of February. Okay, and today we will be having the first demo. So yesterday we had what? We had our orientation class. This is the first class in which we are going to do the conceptual study, and the topic for today is financial markets. That's the module D, unit number 1. So first, if you want to check the demo, do join this class. This is available on YouTube channel as free of cost for all of you from 9 to 10 p.m. today. Okay, from tomorrow onwards, these demo classes will not be available on YouTube channel. It will be available only for the paid candidates. So if you want to enroll after checking the demo session, so you can do, because right now 80% off is going on this batch by using the code Y496, and this is the offer for today only. After midnight, it will not be there. Okay, so this is the information I wanted to give you all. And now what we are going to discuss today. So we are going to discuss today two chapters, that is venture capital and lease finance and hire purchase. Okay, these are the two chapters we are going to discuss in this particular session. So this is your class number 7 from module number D. So before moving forward and discussing the questions, let's discuss first what these topics are, as we do every day. Okay, so first, when I talk about venture capital, what is venture capital? Venture capital is a part of alternate source of finance. Now, what is alternate source of finance? Simply, when we talk about funding needs or the money needs of public or in the country, it can be individual, it can be corporate, it can be entity. When we talk about them, we have always find out that the majority of needs are fulfilled by the banking system. The commercial banks are fulfilling majority of needs, but still there are certain persons who are not able to take loan from the bank due to the certain regulations, restrictions, etc. And they need money, but they cannot go to the bank. So how they will be fulfilling their needs, and how we will make sure that every person will be having the credit requirement fulfilled in the country. That's why the alternate source of finance have been introduced, in which apart from banking system, we are providing venture capital funds, lease financing, hire purchase, crowdfunding, peer-to-peer lending, factoring, forfeiting, etc. All these are the alternate source of finance. Okay, now when I talk about venture capital, what they do, they collect money from various investors, like the mutual fund does. Mutual fund also collects money from various investors. The same thing happen in the venture capital. They collect money from various investors. After collecting money from various investors, they invest this money to the startups. It means unproven companies. They do not invest the money in the diversified sector like the mutual fund. They invest in the unproven companies. So I guess the difference is clear to all of you. Mutual fund raise capital from multiple investors. They pool money from various investors, but invest in the diversified sector to minimize the risk. That's what mutual fund do. Venture capital pool the money from various investors and invest in these startups, that is the unproven company. It means it is on higher risk. Might be chances there is a growth in the future of these startup, but there also a chance that these startup will not be having a growth in the future. In that situation, venture capital have to face the loss. So they invest others' money in the startups, in the unproven companies, and they take high risk. Okay, that's what venture capital. Acha, as soon as companies started earning money, what they do, they simply take out their money with the profit. Okay, so they only invest in the startup. Once they start earning money, they pull out their money. Now let's talk about lease finance. So I guess leasing is known to everyone. Everyone know what is leasing is, because when I talk about leasing, let's say for example, I am living in Gurugram. That's not my hometown. I came from other city, other state, and I am living here. And to live here, I have taken a flat on rent, or apartment on rent, or whatever, or a room on rent. So I have to pay a rent on that. So I have taken that particular property, that asset on a rent. That's a leasing, providing something or taking something on rent. So if I am paying the rent, it means I am the tenant and I am the lessee. Okay, I will be known as lessee, who is the tenant who have to make the payment. Now the owner who have given me that property to live, that owner or allowed me to use that property to live, that owner will be known as lessor. Lessor means the owner. Now when I talk about lease, this is what the meaning of lease is. But when you add financing, it means to lease out the certain asset you have taken or you are taking loan from the bank, that is lease financing. Let's say for example, in industries, it's very obvious all the industries do not have all the required capital, and it's very obvious that owners are not going to use their own personal assets to start the business. So what is required? They need capital, and to raise the capital, they do what? They go to the bank or other many places. So let's say a certain industry wants to have a machinery to start their production. and that machinery is very costly. It happens that it's not like a small machine we are taking to produce the lakhs of products. The machineries are costly, so you are not purchasing it, you are taking it on a rent, and that rent is also very big, so you are financing that with the help of financial institution. That is lease financing. I hope it is clear to all of you. Let me know once in the comment section, is it clear to all of you? Then next we have hire purchase. Now what is hire purchase? When it comes to the hire purchase, a very basic thing. Let's say for example I want to have iPhone, and the iPhone price right now is, let's say, 2 lakh rupees, and I do not have that much money. But yes, I know whatever I am earning monthly, whatever my salary is, on that salary I can afford iPhone if I will be paying money in installments. So what I am doing, I went to the shop, I have paid a certain amount of down payment to the shopkeeper and taken the phone from him. So I got the possession of the phone, but I am not the owner of the phone right now because I have not paid 100% amount. Out of 2 lakh, I have already paid, let's say for example, 50,000. Now 1,50,000 I have to pay now. And for that, the shopkeeper said that you have to pay 20,000 every month for the next 6 months, for example. So first of all, I have paid 50,000. I have taken that product possession. Ownership still stays with the shopkeeper. And every month from now onwards till the next 6 months, I have to pay 20,000 rupees every month. To whom? To the shopkeeper. Okay, and when I will be done with the last installment, in that situation, I will become the owner of the phone. That's a hire purchase. When I have paid the down payment, I hired that product. I am not the owner. I have only possession. And because I am every month paying 20,000 rupees, so I am paying certain amount of money to let product possession with me. So I hired that product on a certain amount of money. And when I have paid the last installment, I become the owner of a product. And now that product belongs to me. Simple. So that's the hire purchase, lease finance, and venture capital. Okay, these all are the alternate source of finance. In much more detail, we have to study them in form of conceptual study. Okay, so now let's move forward and discuss certain MCQs to clear more concepts about these topics. First is talking about venture capital may raise money from any investor by ways of units. Way of issue unit provided the minimum amount accepted from an investor is. So if venture capital wants to raise capital, as I have told you, venture capital raise money from various investors. Okay, so when they are getting money from various investors, okay, in that situation, the way of issue of units provided the minimum amount accepted from an investor. How much it is? 5 lakh, 10 lakh, 1 crore or 10 crore? And the right answer is 5 lakhs. Okay, it is 5 lakhs. Right answer is A. Next. Which of the following is found in early stage financing? Which of the following is found in the early stage financing? The early stage financing covers your requirements of the institute in the initial years. So you have to answer which of the following is part of early stage financing. So when you say expansion finance, buyout deals, replacement finance, second round finance, which of the following is early? So replacement is not an early stage, buyout is not an early stage, expansion finance is not an early stage. It is after developing the business you need these money. So in the early stage you will be having the second round finance. So the right answer is D. Okay, right answer will be D. Next question we have here, that's talking about which of the following characteristics of venture capital funding is incorrect. Which of the following characteristics of venture capital funding is incorrect? First is saying they are high risk investment made with an intention of making high profit. The investment made are based on the short term goals. The provider of venture capital can participate in the management of the company. Money is invested generally by buying equity share in the startup company. So they invest in the startup company, very true. It is true, and we have to find out which of the following is incorrect. The last one is true. The second last is also true because they participate in the management of the company. The first one is also true. They take high risk because they invest in the unproven companies, and they have a certain kind of expectation that this startup have a potential to grow, so it will have more profit in the future. It will give more profit to it in the future to us. This is also true, but this is not true. The investment made are based on short-term goals. No, it have a long-term goals. It's not like you are investing your money in the startup, so next month you will get in this month you have started your business, like you invested in a startup, and next month that startup will grow and give you the return. Obviously not. It's a long term, not a short term. So right answer will be B. It is incorrect about the characteristics of venture capital. Next, in 1972, the committee which recommended the venture capital business was. So out of these, which committee actually recommended the venture capital business? Is it Malhotra committee? Is it Bhatt committee? Is it Goipura committee? Is it Bhatnagar committee? So let me know which of the following is correct. A, B, C or D? A, B, C or D? And the right answer is your obviously Malhotra committee is related to insurance. We have discussed so many times. Right answer is a Bhatt committee. Right answer will be your Bhatt committee, that is B. Okay. Next question. Next we have which of the following statement is incorrect. A statement incorrect you have to find out. First is saying finance for new projects is riskier. Second, venture capital is finance established projects. Third, venture capital is long-term investment. Fourth, venture capital's list step in where the probability of failure is high. So what do you think? Which of the following statement is incorrect? So they have a probability of failure of high risk. This is true. They have a long-term investment. This is also true. They finance for new project, that is riskier. It is also true. But they do not finance the established projects. They finance actually the unproven projects, the initial projects, the startups. So the incorrect statement will be your B statement about the venture capital. Okay, right answer will be B. Next we have here, in a hire purchase transaction, the owner of the asset is also known as. The owner of asset in hire purchase. Is it a hirer? Is it a hiree? Is it a seller? Is it a purchaser? So it's very obvious because the name is hire purchase. We will be having a specific name for the owner. So it can be hirer or hiree. And the right answer is B, that is hiree. Okay, right answer will be your B, hiree. Clear? Next question. Next we have here, in which of the following types of leases are the assets bought on loan? In which type? So there are types of lease you have to study. There is a finance lease, operating lease, leverage lease, funded lease, open lease, back end, front end lease. A lot of types of lease are there that we have to cover. Now here asking, in which type of the leases are asset bought on loan? And the answer is leverage lease. On leverage lease, you take the assets on a loan. So right answer is C. Now next question is talking about which type of lease involves two or more countries. Which type of lease involves two or more countries? Worldwide, maritime, cross-border, none of the above. And I guess it's very easy to answer. It's very simple to answer because two or more countries are involved. It will be your cross-border transaction, or I can say the cross-border lease. So right answer will be your C. Okay, right answer we have is C. Cross-border lease. Next question. In which type of lease does repair and management lie with the lessee? Lessee means the tenant. So first of all, lessee means tenant, and all the repairing and maintenance of the lease asset have to be done by the tenant. It is a which of the following lease? Finance, operating, whole time lease or end-to-end lease. And the right answer is B, that is operating lease. They both are opposite to each other. Do remember, operating lease says that the lessee have to take care the charges of repair and maintenance, but finance lease says that the charges of maintenance and repair will be taken care by the lessor. So they both are opposite, which finance and operating. So right answer will be your B. Next, Which of the following covers the entire economic life of an asset? Like when you are giving any asset on a lease, when you are giving any asset on a lease, in that situation we are asking about that when you give that lease asset for the economic life of that particular asset, what type of lease is it? Finance, operating, whole time, or end to end? And it will be your finance lease. It will be your finance lease because it gives for the economic lifetime. Good evening everyone, welcome to the official YouTube channel of Officers Adda247. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as you know, every day we are coming here at 7 PM only on Officers Adda247 to discuss the certain units, or I can say the most important questions of your Indian economy and Indian financial system, in which we are having most important question from the particular unit of your module. So in this series we have completed module A, B and C, and we have started module D. In module D today we will be having the class number 8. It means we have already discussed the certain units of module B. So if I talk about IE IFS paper, now one thing I want to tell you all, that start preparing this paper. Reason? Because this is your first paper and there is a maximum chances that you will find the paper will be on the May's first Sunday. It means it is around 5th to 8th of May you will find your first paper, and we have very less time now. So that's why we have to start preparing very soon if we have not done yet. Apart from that, those who have already started preparing for the JAIIB paper, very good. And also I would suggest to all of you while you are preparing that do make sure when you cover the conceptual study, also make sure you practice the questions on those concepts, because it is very important whatever you are reading you also learn how to apply that concept in the paper. These two things are very important. It's not like only having conceptual understanding is sufficient. No, to apply that concept in the paper is also one of the important part of our paper. Okay, so do make sure you start preparing for your subjects, and if you have already started, do make sure you do the conceptual understanding plus practice on the same. Okay, so let's start today's session. As we have discussed here in the last class the certain units, so today we are going to talk about the credit rating and credit scoring and the mutual funds. So these are the units that we are going to discuss today in this particular session. Achha, let's move forward. And first, those candidates who are here for the first time and watching this series for the first time, this session for the first time, I would love to inform you all that all the sessions from yesterday till the 4th of December, all the sessions are available in the playlist only on Officers Adda247. And if you're willing to watch the sessions, because these sessions are actually going to help you in your preparation, and if you want to watch those sessions, you can watch recorded on Officers Adda247 playlist. Okay, so let's move forward and let's talk about the certain topic, and then we will move forward to the questions. And first let's understand what this topic is. So first is credit rating and second is credit scoring. When you talk about credit rating, who provides credit rating? So we have to remember that the credit rating agencies provide credit rating. Okay, now who gives us the credit score? So the credit information companies provide us the credit score. On the basis of what? On the basis of the credit history. So on the basis of the credit history, we find the credit rating and credit scoring in the country. Okay, so when it comes to the credit rating agencies, they are regulated by SEBI. They provide rating to the corporates, to the companies, to the governments, to the countries, etc. When we talk about credit information companies, these are the companies which actually are regulated by RBI, and they provide credit score to the individual customer, but they also started providing commercial score to whom? To the companies. Okay, like if we talk about examples of credit rating agencies, we have CRISIL, we have ICRA, we have CARE, we have SMERA, we have ONICRA. All these are the credit rating agency of India. If we talk about an international market, we have S&P, sorry, it's actually actually Standard and Poor, S&P. Then we have Moody's, then we have Fitch Ratings. So these are the international credit rating agencies. If I talk about credit information companies, we have CIBIL. CIBIL is what? Credit Information Bureau of India Limited, that provide credit score to the individual persons like us. So these ratings and scores are very important in the financial system. Why? Because on the basis of this credit score and credit rating, we means as a financial institution, it will be decided that we will be giving loan to this particular person or not, this particular company or not. So in short, they tells us about the credit worthiness of the companies, of the individuals, that helps us to find out that it is good to go for providing funding to them or not. Okay, and or in short, I can say they are, if you are having a credit rating or credit score, this is a kind of a proactive approach from your side to find out that there is a kind of risk or not when you provide the certain fund to the person. Okay, then apart from that, if you talk about mutual funds, so mutual funds are what? They are professional managers. Mutual funds are simply professional managers. They pool money from various investors. Okay, and then they invest that money to the diversified sectors. Why they are investing in diversified sectors? Just to earn or just to minimize the risk. Like if you remember in the yesterday's session, we have discussed about venture capital. So what venture capitals are doing? They collect money from the various investor, and then that money will be invested in the startups. That's what venture capital does. The same or I can say almost same thing is there, that mutual fund collects money from the various investors, but they invest in the diversified sector so that they will be capable of minimizing the risk. And that's what your mutual fund is. Okay. So this is the basics of the topic, and the mutual fund scheme has a lot of types of scheme that we have to cover. Okay, that you will be covering in the conceptual study of the chapter. Now, let's move forward and discuss certain questions on the same. So the first question is asking about what is the maximum credit score that can be awarded to an individual. The maximum credit score that can be awarded to an individual. 300, 500, 900, 1200. A, B, C or D. What is the minimum credit score that can be awarded to an individual? 3, 5, 9 or 12. And actually the credit score is provided by CIBIL to the individual, Credit Information Bureau of India Limited. It provides 3 digits score. Okay, and the 3-digit score is 300 to 900 on the basis of the credit card and loan repayment. Okay, on the basis of the credit card payment and loan repayment, it provides rating between 300 to 900. That is known as your credit score provided by CIBIL. And you can simply say now the maximum credit score is 900. Remember all these details also. Okay, so right answer will be your C. Next question. Next we have here, which of the following does not indicate investment grade rating here? So investment grade credit rating means what? A, B, C or D? A, B, C or D? Triple A, triple B, A or double B? So actually what happens now, the rating will be provided by the credit rating agencies, okay, and that actually indicates that how much or we can say the probability of risk in the investment. If you are investing in those companies or you are giving loan to those people, so how much risk will be there, the probability of risk will be understood by the ratings. And the rating we talk about, that's not investment grade rating. Investment grade rating means the ratings which is actually have a less chances of default or the risk. And the right answer is double B. Double B is not a part of your investment grade rating. All the other are. So till triple B, till triple B we have a investment grade rating. After that we do not have the investment grade rating. So the right answer will be D. Next question. How many approved credit rating agencies are there in India? How many approved crediting agencies are there? So approved means, first of all, they are regulated by SEBI. All the crediting agencies are regulated by SEBI. It means those credit rating agencies which are approved by SEBI. Which of the following is 5, 7, 10 or 15? 5, 7, 10 or 15. Which of these are the approved credit rating agencies in India? Okay. And when you talk about credit rating agencies which are approved by SEBI, so the number of those credit rating agencies will be your 7. How many credit rating agencies are there? 7. And the name I have already given you. So right answer is B. Next question. In which year was the first credit rating agency established in India? In which year the first credit rating agency established in India? 1947, 1972, 1987 or 2000? So you can easily eliminate the 1947 because at the time of independence we have not introduced any credit rating agency. Okay. So out of 72, 87 and 2000, what is the year when we have introduced the credit rating agency first time? So the country's oldest and largest credit rating agency is CRISIL, Credit Rating Information of India Limited, and it was established in 1987. That was the first one. So right answer we have is C. Okay. Next question we have here is, a high credit rating denotes which of the following? High credit rating. If any company's rating have been high, it shows what? The high probability of default, the low probability of default, the high probability of compliance breach, the low probability of compliance breach. So what do you think? Which of the following will be correct? If you have a high credit rating, it means it's better to invest in this company. And why it is better to invest in this company? Because it has a low probability of default. Clear? So as per the credit rating, it will be find out in which company the investment is at the high probability of default or a low probability of default. So here right answer will be B. Okay, next question. Next is talking about what is the minimum amount for investing in mutual fund using the SIP method, systematic investment plan. By using SIP, what is the minimum amount that you are allowed to invest in? So let's say I want to start investment. I want to start the investment. And when I want to start the investment, I can go for the SIP. And when I am going for the SIP, what is the minimum balance or minimum investment allowed to me? And the right answer for that will be 500 rupees. I can start SIP with minimum 500 and after that it depends on me. Okay. So right answer will be B. Next question. A medium duration fund is an example of which type of mutual fund? A medium duration fund is an example of which type of mutual fund? Equity, debt, hybrid scheme or solution oriented scheme. So as I have told you, a lot of mutual fund schemes are there, right? A lot of mutual fund schemes are there that you have to remember. You can see we have equity, we have debt, we have hybrid, we have solution oriented and others are also there. So the medium duration fund is an example of which type of mutual fund? It's a debt scheme mutual fund. It's what? Debt scheme. Answer B. Next. A multi-cap fund is an example of which type of mutual fund? Multi-cap fund is an example of which type of mutual fund? Equity, debt, hybrid, solution. So when it comes to the multi-cap, it will be your equity scheme. It will be what? Your equity scheme. Next, what is the minimum amount of subscription for debt-oriented NFO, net-owned fund? What is the minimum amount of subscription of debt-owned fund, debt-oriented, net? Is it 10 crore, 20 crore, 50 crore or 100 crore? A, B, C or D? So minimum amount of subscription for the debt-oriented NFO. A, B, C or D? So the right answer actually here is 20 crores. What is the right answer? Answer is 20 crores. So the minimum amount of subscription for the debt-oriented NFO is your 20 crores. Okay. Next. The next question is talking about the entity that established a mutual fund is known as. So the entity which established the mutual fund, it is known as what? Achha, apart from that, one more question have been seen, very simple question, that mutual fund is a dash. So what is a mutual fund? Is it an institution? Is it a firm? Is it a trust? What is it? So do remember, mutual fund is what? It is a trust. Hana, mutual fund is what? Trust. And the entity that establishes the mutual fund, it means the entity which gives funds or which finance the mutual fund. That entity will be known as what? It is the sponsor. Like if you remember in RRB, Regional Rural Banks, we have RRBs, Regional Rural Bank. They are the rural banks of our country. And when it comes to the rural banks, I can say that we can say here Regional Rural Banks established. The first RRB was established on 2nd of October 1975. That was the Prathama Gramin Bank. And the Prathama Gramin Bank was established with the sponsorship of Syndicate Bank. So Syndicate Bank have given 35% capital to the Prathama Gramin Bank. That was established as a first RRB. Now, if I talk about first RRB, the Prathama Gramin Bank, we can simply say that RRBs, when they are established, there have to be shareholding between the central government, state government and the sponsor bank. So central government will have 50%, state government will have 15% and the sponsored banks will have 35%. This is the shareholding we are talking about in case of your RRBs. So RRB, Regional Rural Bank, have the shareholding of central, state and sponsor bank. Sponsor bank means the bank which gives money to start the RRB. Okay. And acha, now a syndicate bank have been merged in which bank? In the Canara Bank. Remember that also. So similarly, the entity that established the mutual fund, it is a sponsor. And mutual fund is what? It's a trust. Okay. Now, okay. So this was all for today. Now we have to discuss how many answers you have given correct. Also, no double validity offer is available now because the offer have been removed. So first of all, we have started the new JAIIB May 2024 batch. That's a victory batch in which I have already started Indian economy, Indian financial system from 6th of February. If you have not enrolled yet or if you have not checked the demo, then go to the playlist. You will find the demo there. First orientation class is available. Second demo is available. Do make sure you watch both so that you will know if you want to enroll or not. Clear? Or if you are regularly following my sessions, so you know how I teach. So I guess according to that, you can also enroll. So this is the batch. 9 to 10 p.m. I am taking the class for IE IFS, and right now 78% discount is available on this batch. If you use the code Y496, the same thing is there on the Mahapack, 78% discount on the Mahapack. Okay. So how to enroll? First of all, you have to download the application. But before that, this is the also information I want to give you all. The first is asking about that JAIIB IE IFS readiness test we are conducting. Okay, in this particular test, you will find that from 9th to 11th of February, you will find this test will be live. You can attempt this test from 9th of February 6 p.m. till 11th of February 11:55 p.m. Okay, so this is the timing in between which the test will be live. You can go to the Adda247 application and attempt the test. Now, how to register the test? First of all, you have to download Adda247 and click on the register button. And now, once you click on the register button, you will be registered and then you can do what? Give the test. So, this is the application that you have to download. After downloading the application, what you have to do? Simply go to the home page. On home page, you will find the exam category that you have to click on, and the exam category you have to search for is JAIIB and CIB. Clear? So this is your home page. When you scroll down, you will find here, you will find the JAIIB IE IFS test that I will show you here. So you have to simply scroll them. You have to slide them and you will find the readiness test of IE IFS. Then click on the register, you will register automatically. Then go down and click on the JAIIB JAIIB, CIB, click on the JAIIB May 2024. These are the batches. And this is the batch I was talking about, Victory batch. Do check the offering. After checking the offering, you can check the study plan as well. This is your study plan. Click here. You will find the study plan. You can download it. It started from 6th of February. We have started Module D, Financial Market. Apart from that, click on the buy now option, and if you want to get more than 75% discount, use the code Y496 and you will get here 77% discount, and 1% discount will be available by using the coins on Adda247 application. So 78% discount is there. 6-month validity. Code will be Y496. Okay, this is how you can enroll in any batch. Apart from that, if you regularly want to join the YT sessions on YouTube, or I can say the YouTube session, then you have to subscribe the channel Officers Adda247 and press the bell icon so that all the upcoming sessions notification be given to you. Okay, so this was all for today. I hope you understood the concept of credit rating, credit score, and the mutual fund and the questions as well. But yes, it is not sufficient. It is just the important MCQs we are practicing here, but more than that is required to clear the paper. And for that, you have to go through the conceptual understanding or the detailed analysis, or not analysis, detailed study of your syllabus. Okay, and for that, you can check the batch, that is your batch of victory. Okay, so let's end the session here. Thank you all for joining the session. I will be meeting with all of you tomorrow at the same time with the next unit of your module D.